All right, traders, welcome to today's end of day recap for the first trading day of September. What a day, right? Strong for new money being put to work and the market going up very nicely. I'm joking. That's not what that's not what we got today. In fact, quite the opposite. And it's kind of funny because that is sometimes how it works, where we do see new money being put to work in the beginning of the month, but it's not always the case. Sometimes there's more money being put to work in bonds versus equities. Sometimes we do see that once we kind of get around to the fall or the autumn part of the year. There's no guarantees. And a lot of times when we talk about the market, we talk about probabilities. We talk about what normally happens, right? And that's the same thing with September seasonality. My goodness, how much, I had mentioned this leading into, because I try to kind of look a little bit towards the road ahead and say, hey, August, September, that time is not a great time for the year for stocks. And I had so many people challenge me on that and talk about that. Oh, everybody's talking about it, so it's not going to happen. You know, that's not to me, that's not the best analysis to say, oh, everybody's talking about something. I would rather play with the odds of things that we know about, even if they become a little bit obvious. That's okay too. Because there's also, I think, a number of signs just indicating that too. I'll get to that. Risk disclaimer in front of you. Everything that we're going through is for information purpose only, not giving out any advice or recommendations. Please read the full risk disclaimer right there. So as always, I always get questions. And by the way, there's nothing wrong with these questions about whenever there's a move down, everybody always asks, well, what's the news? What caused this, right? Nobody ever asks any questions when the market goes up. But when the market goes down, whether it's 1% or 2% or 3%, folks want reasons. They don't want to hear that that sentiment was way too hot and that nobody was thinking that the market was going to go down, right? That's not, sometimes people don't like those types of responses. Like, for example, there was this, right? Americans are really, really bullish on stocks, right? This is on the Wall Street Journal, right? That's there used to be back in the day when of course, when I started trading, but even after I started trading, they would call this, be careful of like magazine covers, right? When they would talk about how hot stocks are on the top, on like Time or Life or Money Magazine, right? When they said like the market's never going to go down, like that's when the market gets hit over the head, right? And I think that's a little bit, again, I'm not saying that this is the only reason for that, but there is also this, right? S&P 500, BOFA's top indicator is getting bullisher and bullisher. Okay, I've never heard that term before, and that's another reason too. So you just have ultra bullishness and going into a time where it's one of the weakest times of the year for stocks. So to me, it's a bit of common sense. Now, what I would argue with is, these sell-off days where we trend down like this, they are quite vicious. I mean, IWM was down 3%. The Qs were down 3%. The semiconductors were down 7.5%. So why do you think the semiconductors were down 7.5% today? Right now, there is this story about NVIDIA gets Dow Jones subpoena in escalating. What is this? An escalating antitrust investigation that came out after the close. But so the semiconductors, why do you think they're down 7.5%? My take is, and I saw people posting a lot of bullish semiconductor setups going into this week, and I was like, you're kidding me, because it's just too overcrowded. It just is way too overcrowded of a group to be looking at. And the fact to me that the semiconductors have been showing relative weakness. I saw somebody post, like a couple of people say, "Oh, look at this turn. We're going to start going higher now in the semiconductors." I'm like, you're not. So no offense to those people, and I'm not trying to beat anybody up, but these things, and I'm here to do these end of day videos to teach. But the fact that we were up here on July, what day was this? July 11th, I think this was July 11th, right? And this only retraced half the portion of the decline. Is that bullish or is that bearish? Before it really got hit hard. To me, that's bear. That's not bullish, right? That's bearish, right? And if you look at other things, right? Like the financials, right? For example, the financials got through the previous highs in July. And here in the beginning, this was also at the beginning of the month of or the end of the month of July, and made it through those highs. That's relative strength, and that's bullishness. That shows you where there's market leadership. But to come in and say that they retraced half move and you're getting ready for this to now turn up when the rest of the market has gone higher is really piss poor analysis. Sorry, but that's the best way I can describe it. Here's the healthcare stocks. I mean, do you think all of these things like financials, healthcare, insurance companies, defense companies, and I can go on and on with this list. But do you think all of them went higher and then all that money is going to rotate out and go into the semiconductors just for the hell of it? No, I think that this is telling you something. And, I think it's telling you that the market doesn't want riskier securities right now, right? It wants to stay away from tech, right? And tech has also been one of the trailing, has been, and again, I'm not trying to beat up tech because I was overweight tech for a while, but same thing. It didn't come near those previous highs. And just by definition, that's relative weakness, right? And the reason why I make such a reference to relative strength and relative weakness is because it's the market is telling you something when certain areas blast off to new highs and others don't, and they only retrace a portion of the previous move, right? That means that you've got those are weak things, or they could be overcrowded things, and they could have just made their move already. And the best thing I think to kind of that you can do is when you go through those charts, you have to be unbiased. And I get that growth traders, they only want to look at growth stocks, and it is much more fun to trade growth stocks. I'm not going to lie, but sometimes we don't have that. And I think the more that you can realize that there's something else that's going on in the market, I think is very beneficial. And because the adjustments to the adjustments to make are to be underweight those areas that are not performing well, right? And this way, because as you could see, even though these things are overbought, right? And that I've been talking about this ETF for a long time now, SPLV, but this will eventually see a correction to it, and it's very overbought, and I would not buy this here. And I said this last week too, and I was wrong, and we've still gone higher. I said I didn't want to buy this, in here. The same thing with the consumer staples. I said, I'm not buying the consumer staples up here, and they've continued to go higher, but at least to recognize that that's what the market is really liking right now. Now, it's up to other commentators and it's up to other financial writers to come up with a narrative behind it. Is it because the market is moving more towards a recession? I don't have the answer to that question, why they're going into more dividend related stocks. I do think that Mr. Buffett may know what he's doing, and keep in mind it's also his lieutenants, right? Buffett has taught people, and there's a couple of their traders are following these names, but that Buffett keeps adding to his cash position. Why do you think he's doing that? Right? Do you think that he's doing that because he likes the prospects of the US economy, or do you think that he's thinking that, hey, maybe there's a reason why that the Fed is going to cut interest rates? Which brings up another question too. There's folks that so badly want rate cuts, but if the Fed has to cut rates quickly, right, that means that the economy is not doing well. Now, the economy is not the same thing as the market, but you do want some growth. And so it's a very good argument to kind of think about, and I don't have the answer for that, but would you rather have rate cuts, or would you rather have a strong economy where the market is doing fine with a little bit higher interest rates? I would argue that it's a pretty good sign when the economy and the market does well, when interest rates are not 0%. But in any event, like, because people are like, oh yeah, they're going to cut interest rates faster. I don't think that that's like a great catalyst for the market. I really don't. I've had to issue, I think that printing money and so forth um, will help things, but you know, from the very start of that, it usually takes a while for that to filter into the economy. It usually takes about 6 months for when they cut interest rates to when it actually has an effect. And usually, so anyway, I'm not going to go off tangent about whether the Fed is early or late, but the important thing to recognize here is that I would watch your support, and the last thing I was going to say is notice how much. So the Qs have been trailing, right? They've been trailing the S&P. They've been trailing the diamonds. Look at how, even though they've been trailing, that that doesn't mean it's a buying opportunity. And on a bad day for the market, and just like the semis have been showing relative weakness, they're down. They were down 7.5%. So if you're buying things just because you think that they're um, that down more is a good thing. When the market does go down, those things get hit even more. So it's a very bad principle and something that you have to go through as a trader. And trend following is a wonderful book to read, but you always want to put your best players on the field, right? You don't want to put the underperformers. For example, right? Let's say you have two field goal kickers, right? Do you want to put okay, say you've got a big game that's coming up. Again, I like these football analogies as we get closer to the football season. Do you want a guy who's missed his last 10 field goals? No, maybe he's missed his last 5 field goals, and then the next game comes and he misses his next. Now he's missed 8 field goals in a row. Do you want to put that field goal player in the game as your go-to clutch field goal kicker who's missed, you know, 8 field goals in a row and you've got to make 3 or 4 field goals next in the upcoming game? Or do you want somebody who's a bit more consistent and who's made 7 of the last field goals, right? Which would you rather put on the field? Do you want the guy who's just because he's underperformed? Do you think he's a better buy? So these are the things that I think about, and I try to get traders to get a feel for about staying away from those areas. Also, look at what happened today with energy stocks. This has been another underperformer of the market, right? So again, I'm not trying to pick on semiconductors and I know that they're a very popular group, but energy stocks have been trailing now for a while. They just haven't showed anything other than like a sideways range bound type market. And this is not a great place to be either. You want nice uptrending things, and energy stocks, which have been weak, stayed weaker. And in fact, all the commodities are getting weak. So, I try to, a lot of times for traders, I try not to give them the answer, and I don't have all the answers per se either. But here's copper futures. What is this telling you about the global economy, right? The fact that this thing has been going down for the past 6 months, right? Is this positive or is this negative to see copper continue to go down? And even emerging markets, right? Because emerging markets have some correlation to copper. Is copper going down and getting hit hard? Is that very good for the economy, right? Is that a positive sign or a weaker sign? So the last thing that I'll leave you guys with, is it the last thing that I'll do for today, is, I came out with this over the weekend and people didn't like it. It got very little likes, and people who did comment told me I was nuts because everybody thought there was going to be everybody saying it's September, weaker seasonality, so therefore we're going to go higher, right? But notice what happened here in SPY. We made a new high and we didn't really come out and take that high out. Now, again, I am not saying that this is going to play out the same way. All I'm trying to do is get people prepared that this could go on for the months of September and October. We peaked out here at the end of July, very similar to what we did this year, right? And then when we got to the end, the beginning, we had a rebound last year in August. We came out to try to retake this high, and we didn't. Now, again, it doesn't look exactly the same. And you know why I don't overlay the same charts over other charts is because history doesn't repeat exactly, right? It rhymes, right? So to do these, what do they call them? What's the right term that I'm thinking of? These analog is the word I'm looking for. These analog charts, they have to be, again, I'm really giving you a colorful video at the end of the day here. But it's one of the stupidest things I've ever seen people do is they try to compare one time frame to another time frame, and they think it's going to go tick for tick, right? It's not, but it could possibly resemble other time frames. So again, I don't think that we play out exactly like this, but you could kind of take a little bit of, understand that this is what happened once we got into September. Not much volatility is what we saw today, clearly, right? But we started to kind of move down, and we just began to make a series of lower highs. So here was the first lower high, right, beginning of September. Then another one here on the September 14th. Then another one here in the middle of October. And this one was tricky because October seasonality is supposed to get stronger towards the end of the month. But again, you can't just rely on seasonality either, because it didn't work out that way. And the market got smoked at the end of October, right? And that was the last move down. And by the time this last move happened at the end of October, it wore everybody out because everybody was thinking that the market was going to turn higher here. It didn't. It failed and took a nasty lower leg. And then finally, we started to go up at the end of October once we washed out. And this went on for 3 months, right? Here, again, there was we'll classify this as because this was still a down month, I believe, but August, September, and the majority of October. That's a long time, and I remember when this happened. Again, it's not that long ago, but it was just kind of draining for it to go on as long as it did. And then we went higher, and then everybody over here was doing victory laps saying, I called the low, I called the low. Remember that too? Just a bunch of morons. But so here's where we are, and all I know for now is that we did not take out the highs, and we just kind of have to see if this is going to be support. It could be a shakeout, but we don't know. And for now, we're below the 5-period moving average, and I think you got to be a little bit more defensive. And I think for strategy for this month, so what do? Does it mean that you have to go 100% to the sidelines? No, I don't think it means that either, but I think that you want to be selling the rip as much as possible. So let's say for tomorrow, if you added some things or got caught in some things in today, and the market gap ups tomorrow, right? You probably want to be selling into that, right? And that's the strategy that I would use until we kind of take out these prior highs, right? And I said at the beginning of the day, because I didn't know what kind of day that we're going to get today, but I said, hey, we break above 563.89. I have no choice to be bullish, even though I've had a little bit of a bearish feeling over the last few days. But we start to get above 563.89, then it's then I will turn bullish. And again, it's really not that far away. One other thing that I would say it's different, and I made this comparison too on Twitter. Where am I going here? Right, is that the breadth had already started to fade pretty hard before we started to move down like this. So one comparison that I made is that while this was starting to trend down, while price was starting to trend down, breadth was already doing that for a couple weeks. This is a little bit different because breadth has been, other than today, and again, one day is not a trend, breadth has been very strong. So we'll see how it plays out. It's a little bit of a difference there in breadth. What I would be looking to do is, what I would also suggest you do, and again, I'm not giving anybody recommendations here, but basically have your watch list of what names do you really like. Now, I'm long this FTAI. This has been one of my favorite plays, but it got sold today. And, there was also this story about Airbus parts and so forth. I'll let it shake out a little bit. and it could find some support right at that 117 level, right? But it could also go down to the 20-day moving average. But I'll be buying someplace in here once once I see that the selling pressure is abated a little bit. But have your name, have maybe 5 or 6 names that you're really going to concentrate on, that are your favorite names that have been in strong trends. Right. That's my opinion about the strong trends, but that's how you get ready. You kind of, if you had a big watch list coming into today, you concentrate on your favorite names that you have more conviction and confidence in. Right. And that's how you do it. That's what we did in the beginning of August. Right. Once this happened, right, I kind of waited a little bit, and then I went on the attack mode once we started to move back up. So I'll leave it there, guys. Have a great night, everybody. See you tomorrow.